Mr. Nitin Raheja, Executive Director at Julius Baer Wealth Advisors, joining us. And along with him, we also have Richard Jain joining us of Motilal Oswal Financial Services. Good afternoon to both of you. But before I come to you, Aditya, I want to come back to you and get your sense on the kind of moves we've seen on Aditya Birla Capital post its earnings. The stock is up 11%. We had the numbers come in about an hour or so ago. Just look at that kind of uptick we've seen on that stock. Aditya, what's your take on this stock on the charts, and what's this 11% intraday move today telling?
A very strong move, without a doubt. And I think so. If one already has the stock, saying one should continue to hold on to the positions because I see much higher levels in the coming times. One can look at least a level of 360 on the upside if one holds on to it for at least 6 months or so. My sense is 360 is something which is possible here. If somebody is looking for a fresh entry as well, maybe they can go ahead for a staggered buying. They can buy some at current levels, and if it declines, say, to close to 265, 270 in the event of any profit taking, they can add on to the further positions for a target of 360 that I just mentioned. It's a very strong looking chart setup, and the volumes are also confirming the up move is going to stay and could see much higher levels.
All right, so that's the take coming in on AB Capital. Well, of course, very strong moves coming in just an intraday basis on AB Capital, really recouping all the losses that the stock has actually seen in the past couple of weeks as well. But Nitin, hi, afternoon. Firstly, what's your take on the markets? Any pockets where you are finding strength in this sort of a market as well? Indeed, a lot of sector churning underway.
Oh, yeah, absolutely. So I think, when we went into this quarter, the expectations were very low because the expectation was that this is going to be a weak quarter, and the whole downgrade cycle that was happening, would probably continue. Having been almost, let's say we are in the middle of the earnings season right now, it's not been as bad as was earlier thought about. Whether you take the IT pack, whether you take some of the banking pack, I think it's not been as bad as was thought. So I believe that, which is a positive sign as we look ahead, because the so-called slowdown that the economy is experiencing is possibly not as bad as most people thought, and which could mean that as we get into the second half of the year, we could see the worst of the downgrade cycle behind and in fact start looking at some upgrades.
Okay, so that's the take on where the market is headed, what the market texture right now is. But Ruchit, hi and welcome to the show. Good afternoon to you. Let's get your view on some of the sectors that are doing very well today. We spoke about the metal sector with our guest earlier. But what are you making of the moves we're seeing on real estate? IT was one of the top losers today, and look at the kind of rebound it's seen from the day's low. That index is higher by 1.6%, and similar moves for real estate as well. A couple of stocks, Ruchit, if you're liking from either of these pockets at the moment?
Yeah, hi, very good afternoon to everyone. So I think IT overall trend, although it's not positive, but post the recent correction, some of the heavyweights such as Infosys, TCS, HCL the momentum readings in these stocks are quite oversold. So whenever we see such oversold setups and the stocks comes near the support, we tend to see some pullback moves, at least in the near term. So I think a short-term pullback move can be seen in the Nifty IT index, led by stocks such as TCS, HCL Infosys, where the stocks are trading around the supports, and even on the hourly chart, if we see all these three names are showing some positive divergence along with the RSI. So not a trended move, but at least a short-term pullback move I think should be seen in the IT space.
All right, that's the day coming in on the IT space. Well, of course, not just TCS, TechM, HCL these stocks are on the up move in today's trading session. But Nitin, coming back to you, I believe cement was one such pack where you believe that the earnings growth will definitely lead to good growth in the stock as well, and you were indeed bullish on the cement pack. Nitin, off late, we are seeing the only pack that is showing resilience is the cement pack. Look at the move that we are getting to see on stocks like Ultratech, Ramco, Star Cement in today's trading session. Even Ambuja and ACC, they are showing up move. What's your current take on cement pack, and from these levels as well, what sort of an upside do you believe this sector and stocks can really show?
So, cement has possibly shown, most of the cement companies have shown the best EBITDA per ton over the last 1 year. This has been a really fabulous quarter for almost all the cement companies in terms of their profitability. As we talk, the second quarter is traditionally a weak quarter because of the monsoon month. But I think we will continue to see a strong uptrend as far as cement companies are concerned, because I think uh, the focus on infrastructure spending and capex is going to drive this. And it's my own view that given the current scenario with regard to tariffs and so on and so forth, plus the concerns over the domestic slowdown in consumption, I think the government will, in my view, be forced to relook at the slated expenditure that they have slated, driven for investments, and I think that should see an uptick and see that happen in the second half. So I think cement, we continue to remain positive.
Positive move coming in on the entire cement space, but let's pull up the stock of Bharti Airtel and take a look at what that stock is doing ahead of its earnings tomorrow. And the stock is up; it's a good uptick coming in on that stock, 1.6% higher as we speak. What is the street penciling in when it comes to Bharti Airtel's numbers? What can we expect to see? And more importantly, where are all eyes going to be? What are the factors that are going to be important to watch out for in terms of management commentary or some important metrics out for when the numbers do come out tomorrow? Pulkit is here to take us through all of that. Pulkit, over to you.
Bharti Airtel is about to announce their Q1 results. So if we talk about the revenue in INR terms, we are expecting somewhere around 2% up. If we talk about EBITDA, it would be around 1.6% up. For EBITDA margin, we are expecting it to be flat. A slight dip could be seen, that is around 20 basis point. For profit after tax, we can see around 42% dip. And please note that this would be there because of the exceptional earning that happened in the last quarter. If we talk about the adjusted PAT, we are expecting somewhere around 23% up. For ARPU, that is average revenue per user, we are expecting it to be around 249 rupees, and which would be around 1.6% up quarter-on-quarter basis. Now let's talk about the expectations, that what we can expect from the results. The most important thing would be we can expect a healthy growth in the revenue earnings. For the mobile segment, it can be a steady growth, and for the Airtel Africa business, we can expect a good performance, because in last quarter there was some tariff hike, there were some mobile rate hikes. If we talk about the key things to watch, the most important thing would be FY26 capex plan, how the company is planning for their capital expenditure. Next would be the progress of 5G implementation all over India, and the commentary on how the tariff hike is happening, mobile tariff hikes in India as well as in Africa. So this would be some news that we can expect from the Airtel earnings.
All right, thank you so much, Pulkit, for getting us all those details. So indeed, all eyes on the numbers when it comes to Bharti Airtel. And just a while back, the company has also launched their cloud services for the telecom operators. The press conference is underway, and that's what we are getting to understand from the management itself. So interesting development on that front as well. But Aditya, just wanted to have a chart check on Bharti Airtel, because yes, of course, this has been one of the key outperformers in the market, and look at the move, still near that all-time high level for itself. What do you make of the Bharti Airtel on the technical front?
It's more of a consolidation that you're witnessing on the stock, and my sense is this consolidation is likely to continue. If you want to purely take a trading bet on Bharti Airtel, maybe for a target of 2050, you can take a trade with a stop loss on the downside at 1870. That is all that I see. Overall, if I flip to a higher time frame chart, I see overbought levels, overbought zones, and if anything, I would not be a fresh buyer in the stock for a positional trade. Talking of 6 months to about a year's time frame. So it's more of a trading bounce that I see to levels of 2000, 2050 on the upside.
Okay, so that's a take on Bharti Airtel. Also, remember very recently, Bharti Airtel also announced that it will be giving a 12-month subscription of Perplexity AI to its users. So that is also another big news so that we've seen when it comes to Bharti Airtel recently. So in fact, lots to watch out for when the stock does come out tomorrow, and all eyes are going to be on that that as well. But Nitin, coming to you, what are you making of the move that we're seeing on select banking counters? It could be large caps, it could be PSU banks. While earnings this season have not been all that great, what are you making of how the earnings have panned out for banks, and what's the road ahead?
So when you look at the banking sector, I think it's very interesting. Once again, I think the quality of the franchise has, stood out, and you can see that among the leaders as well as the banks were struggling. So a couple of things. One is, banking is expected to see a compression in NIMs, which is what we saw in the current quarter, and that's expected to happen even in the next quarter. Uh, However, from the third and fourth quarter, you are expected to see the recovery happen. The upfronting of the rate cuts that happened and the aggressive cut that happened has actually essentially seen the pain being upfront also. Uh, my own view is that banking should actually have a very strong FY27 because of a couple of reasons. One is the NIM compression that we are seeing is a two-quarter phenomena, in my view, and we should start seeing a reversal start to take place. Second is credit growth, which has been muted, should come back in the second half of the year and more so in FY27. So I think FY27 is going to be a good year as far as banking is concerned. And within that, companies or banks which have a strong franchise, and have demonstrated their ability with strong underwriting skills are the ones which will continue to lead the pack.
All right, so that's the take when it comes to select banking counters. Well, of course, we are seeing a bit of a divergent move, at least in today's trading session, because a while back it was actually HDFC Bank that was one of the top losers on the Nifty 50 side, and it's the second top loser on the Nifty 50, while of course the decline is just 1%. But Ruchit, what do you make of HDFC Bank on the charts? Because definitely Nifty Bank is languishing in trade, and so is the heavyweight HDFC Bank.
So I think if you look at the broader charts, then the broader chart still remains positive, but just from a short-term perspective, post the recent run-up, the RSI on the daily charts is ending at some negative divergence, which usually leads to either some consolidation or pullback move. So we think that some minor pullback towards 1950, 1960 could be seen in HDFC Bank from a trading perspective. But yes, if one is looking from a mid to long-term perspective, then it remains a buy and dip stock where any declines towards the support should be used as a buying opportunity. But if one is a momentum trader, then one should wait for a decline towards 1950, 1960.
Okay, so those are the levels to watch out for in HDFC Bank. Aditya, what's your take on some of the top gainers today, namely Delivery and UPL? Both of those stocks are trading between 7.5%. Given the kind of run-up, would it now be a good time for our viewers who are invested in these stocks to book some profits, or are you viewing a further upside here?
Let's first talk about delivery, Sneha. I think this up move is a very strong up move from almost 52-week lows. Stock has doubled from 240 odd levels to 460 on the upside, and it's a very strong going, mind you, on the back of strong volumes as well. So I wouldn't suggest exiting the stock just yet. If you had bought it at lower levels, continue to hold on to the stock. Trail your stop losses. The current stop loss that I would suggest would be around 400 odd levels. And the immediate target that I'm eyeing on the stock is around 480 to about 490. And once that is taken out, 600 is also something which is possible on the stock. If you're looking for a fresh entry in delivery, I would suggest you can buy again in a staggered manner, some at current levels and some if it declines to 450 odd levels, it will be a good entry point again with a stop loss at 400 and look for a target of 490 on the upside and then 600. So this as far as delivery is concerned. Talking of UPL, again, that has been a very strong up move in the stock. Friday session saw a bit of a decline and then again it has recouped all its losses. Again, a very strong looking chart setup on the high time frame. If I look at it, looks like stock is poised to test its previous all-time highs of 835, 840 on the upside. So I would suggest continue to hold UPL as well. And as a disclosure, this is one stock that is recommended to our clients as well for a target of 800 to about 830 on the upside, and use declines to initiate fresh long additions in the stock with a stop loss somewhere around 650 to about 660 on the downside.
All right, so that's about UPL. Very strong moves or rebound in today's trading session, and a 7% jump, like we have been flagging off the management commentary, remains to be quite positive. But along with that, if we talk about some of the cap good companies. And Nitin, what we are getting to see is that yes, ABB India has been not a great set. Even the management commentary is not giving a lot of confidence, and taking cues from that, maybe stocks like Siemens, Thermax, they are also feeling that heat. But along with that, if we have to really compare it with one of the other large cap companies, that is L&T, did come out with a good set of earnings, and very divergent moves is what we have seen just on the day of the earnings itself. Nitin, what's your overall sense on this particular space, and if one really has to be very selective, any particular pocket to bet on?
I think very clearly the winners have come out from the power transmission side. I think companies on that side of focusing on capex on that side of the business, power cycle have actually done very well. It's manifest in the strong order book flows that we have seen in companies out there. Some of the other companies are proxies for private sector capex. Private sector capex is something which is just about starting, and we will see the impact on order books come with a lag. But clearly, the segment which has done well is power, and more so within that, power transmission.
Okay, so that's the take on the private capex theme and the revival that we're seeing on that front. But like Shrishti was mentioning, let's just throw the spotlight on ABB and pit it up against L&T and see how both of them have performed in the quarter gone by. Some important metrics to track and how divergent these numbers have been for both of these major companies. My colleague Kanishka, who tracks the sector closely, is here to give us a detailed analysis on how both of these companies have done in quarter one.
Two big capital good companies have announced their June quarter results, and it's a rather contrasting performance and commentary for the rest of the year, especially with respect to order inflow. Now, take a point-by-point look. In the June quarter, L&T reported a very strong performance, whereas ABB India, that faced operational headwinds. L&T's order inflow jumped about 33% on a year-on-year basis to its highest ever in Q1, with a massive order pipeline of 15 lakh crore also identified. Its total order book now stands at 6.1 lakh crore, up about 24% on a year-on-year basis. However, margins saw a minor contraction of 27 basis points to 9.9%. In contrast, ABB India's order inflow dropped 12% on a year-on-year basis, mainly due to timing of large orders as per the company, although base orders also seem to have improved. Now, its order backlog rose about 6% on a year-on-year basis to 10,064 crore rupees, but margins, they have shrunk sharply by over 600 basis points to 13%. On private capex trends, L&T management said that it sees a revival both domestically and globally. Meanwhile, ABB India expects short-term moderation in private capex but stable long-term demand, particularly in sectors like energy, efficiency and industrial automation. Outlook-wise, L&T has maintained its guidance, expects nearly 15% revenue growth in FY26, whereas ABB, that hasn't really given a specific number but said that it is confident of delivering sustained growth. Now remember, this was ABB India's revenue growth was 12% during the June quarter. Well, all in all, L&T and ABB India results reflect a strong macro backdrop, but company-specific execution and order dynamics are clearly driving the divergence in performance for the two.
Okay, thanks Kanishka for that very detailed analysis. Let's once again throw the spotlight on an earnings that we're expecting to see tomorrow, and that's ex-Nifty 50 company Britannia. That's no longer a part of Nifty 50 now, but the earnings are expected tomorrow. And here's what we're penciling in when it comes to Britannia. The stock is slightly under pressure today, but it has no reason to be other than the fact that the entire FMCG sector is in a little bit of a pressure given the kind of heavy lifting it has done over the course of last week. So if you take a look at Britannia numbers, all in all, we're expecting a decent quarter from Britannia this time around, because on the consolidated year-on-year basis, we're expecting the revenue at 4,610 crores, which is up 8.5%. EBITDA seen at 815 crores, which is up 8.1%. Net profit also we're expecting to rise quite healthily, might I add. 12.5% increase is what we're seeing on the net profit front at 570 crores. Margins, however, are seen flat at 17.7% mark. Volume growth is seen anywhere between 3 and 4%, and pricing growth is seen at 6%. Of course, the cool off that we've seen in inflation, in raw material inflation, and of course palm oil duty cut from 20% to 10% now by the Indian government are going to aid the stock going ahead. In terms of factors to watch out for when the numbers do come out, watch out for demand outlook, raw material scenario, pricing action, ad expenses, as well as commentary on rural and urban demand. So that's the take on Britannia. All eyes are going to be on the numbers tomorrow. But Aditya, what's your sense of Britannia on the charts, and amongst the FMCG staples companies, which one stands out to you most?
Britannia definitely doesn't look all that weak to me, Sneh. It's more of a consolidation after a good up move, as you mentioned. FMCG had outperformed last couple of weeks. My sense is it's going to continue to outperform in the coming times as well. FMCG could be the one sector to watch out for the rest of 2025. And my sense is stock could test levels of 6,100 or 6,300 on the upside. So that is as far as Britannia is concerned. Even if the results disappoint and if you see some bit of a profit taking in the stock, I wouldn't shy away from taking a long position in Britannia. And because over a period of time, I believe stock will again consolidate and test levels of 6,100 and 6,300 on the upside. The one stock that clearly stands out for me is HUL, Hindustan Unilever. That is one stock which has done phenomenally well, and I think that is likely to continue its up move in the coming times. Being a large cap stock, I think stock can test levels of 2,700 to about 2,900 in the near term. From the mid cap name, I've got Marico, which looks very strong. And after recent numbers, I think if anything, stock is likely to test levels of 770 to about 800 in the medium to longer term.
All right, so that's the take on select FMCG counters. But with this, Nitin, I would like to thank you for taking the time out and speaking with us. So good having you on the channel today. Thanks so much for that. But with this, viewers, just a few minutes left before we shut shop. Let's get you some of the trading ideas from both of our experts. And Ruchit, help us understand any of your BTST or rather STBT trade ideas.
I think a couple of stocks which are looking good at current levels. One is Power Finance Corporation, where we have seen a good consolidation over the last 3 months. And if you look at this entire consolidation, the stock has formed a symmetrical triangle pattern, and prices today have shown signs of rebounding from the support end. So the price-wise downside seems to be limited from here on. At current levels, one can buy with stock below 404 for potential up move towards 428. And TCS is one stock where a pull trade can be taken. As we discussed earlier as well, IT is one space where the momentum readings are quite oversold. TCS is trading around its previous swing low support and has a positive divergence on the lower time frame chart. So this is one stock where a pullback move can be expected. One can take a long positions with stock below 3,000, expecting targets somewhere around 3,150 to 3,180 range.
TCS looking good to Rajat. Aditya, very quickly, where are you placing your BTST bets?
A couple of buy recommendations. The first one is Reliance for a target of 1470 on the upside, the stop loss at 1380 on the downside. The second one, which we discussed, Marico, is looking interesting to me for a target of 770. I'll be a buyer with a stop loss at 698 on the downside.
All right, so those are the buy calls coming in from both of our experts. But with this, we let you go. Thank you so much, Ruchit and Aditya, for taking the time out and speaking with us.